Hey everyone, and welcome to our deep dive. We're taking a close look at the financial wisdom of Warren Buffett as explored in Robert G. Hagstrom's The Warren Buffett Way.
It's a fascinating book.
Hagstrom is a really respected investment writer,
Yeah.
and this book, I think, should honestly be on everyone's reading list.
I completely agree. It's a classic. And what I find most fascinating about it is how it goes beyond, the sort of technicalities of Buffett's investment strategies. It really delves into the man himself, his mindset, his influences, those foundational principles that have made him such an icon in the world of investing.
So let's unpack this. Like, where does this incredible journey begin? What are we talking about? Where did this all come from?
Well, Warren Buffett's story starts, of course, in Omaha, Nebraska. And his family had this entrepreneurial spirit that you can trace back generations. His grandfather, Sidney, started a grocery store way back in 1869.
Oh, wow.
Can you imagine the seeds of a financial empire being planted in a humble grocery store?
That's amazing.
Yeah.
Makes you wonder if young Warren was like hanging out among the shelves, soaking up business knowledge by osmosis or something.
Well, his father, Howard, definitely played a role. He moved into finance, working as an insurance salesman, then a stockbroker, and eventually founding his own firm. So you can see how Warren was exposed to the intricacies of the market pretty early on.
Wow.
Yeah.
It's like the Buffetts were almost destined for finance. It's in the blood.
But even beyond that family influence, there are these really great anecdotes about Warren's childhood that really show his kind of natural inclination for this world.
Absolutely. Yeah, like the story about him selling Coke for a profit at just 6 years old.
Really?
Yeah, he'd buy 6 packs for a quarter, sell individual bottles for a nickel each, and boom, 20% profit margin.
Wow.
Just highlights his innate understanding of value and those compounding returns, even at that age.
A mini entrepreneur in the making.
Yeah. But it wasn't just about hustling Cokes, right? He was reading everything he could get his hands on about business and finance. Like, imagine him as a kid devouring a book called 1,000 Ways to Make $1,000.
It speaks to his insatiable curiosity and drive to learn, and that I think that thirst for knowledge, it played a huge role in his development.
Absolutely.
Yeah. But, his path wasn't a straight shot to success.
Okay.
When he launched the Buffett Limited Partnership at 25, he was already making waves.
So tell me about this partnership. He was just a young guy, going up against, what, Wall Street veterans?
Exactly. And with this really audacious goal to outperform the Dow Jones Industrial Average by 10 percentage points per year. And what's even more remarkable is how he structured the partnership. It completely aligned his interests with his investors. He'd only get his cut if they earned at least a 6% return. Talk about confidence.
Wow, that's a power move for sure. And he shows he really believed in his abilities and that he was absolutely committed to delivering value.
Yeah.
But it wasn't always smooth sailing, was it? The market landscape is constantly shifting.
Exactly. He ran into challenges. Especially as the market became more speculative, it became harder for him to find those undervalued companies that were really the bedrock of his investment approach. So this forced him to kind of reevaluate his strategy and adapt to, those changing dynamics.
So you're talking about his decision to dissolve the partnership, even though it was performing well. Like, that must have been a tough call.
It was a bold move, yeah. But it showed his unwavering commitment to his principles. He refused to compromise his approach just to chase short-term gains. So in 1969, at the peak of the partnership's success, he decided to return all the capital to his partners. It was the end of an era, but also, the beginning of a new chapter that would lead him to Berkshire Hathaway.
Okay, Berkshire Hathaway.
Okay.
The name that's synonymous with Buffett's empire.
Yeah.
But, let's be real. It didn't start out as this global powerhouse. In fact, it was a struggling textile company.
Yeah.
So how did he go from closing a successful partnership to taking the helm of a company that, frankly, seemed like a risky bet?
That's the million-dollar question.
Yeah.
Berkshire Hathaway was what we call in investing a classic cigar butt investment, a company with kind of fading prospects and dwindling value. Even Buffett himself later admitted it was one of his biggest investment mistakes, comparing it to buying a used cigar butt with one puff left.
Ouch. Not exactly a recipe for success.
Right.
But we all know he turned it into something extraordinary. What was the strategy?
Well, there wasn't a single grand move. He realized the limitations of just pure cigar butt investing and started shifting his thinking.
Yeah.
He saw Berkshire Hathaway as a platform, a vehicle to really deploy capital into more promising opportunities.
So less about turning around the textile business and more about using it as a springboard.
Exactly. He was building what he called a Zinsessen's machine.
The incessant machine. I'm
Yeah.
not familiar.
It's a German word that essentially means compound interest. Think back to his childhood, selling those copes, that early lesson in compounding. He was essentially applying that principle on a grand scale. He would use the cash flow from Berkshire's existing businesses to acquire new ones, generate more earnings, and then reinvest those earnings to fuel further growth. It was like a snowball effect, but over decades.
Incredible. So in a way, Berkshire Hathaway almost became a reflection of his earliest entrepreneurial experiences.
It did, yeah.
But it wasn't just about financial strategy, was it? His father, Howard, also had a significant influence.
Absolutely. Howard was a congressman, and he instilled in Warren a deep sense of patriotism, belief in the American dream, emphasized integrity and public service, and these values became deeply ingrained in Warren's worldview.
Wow. So these seemingly disparate threads, a struggling textile company, a childhood lesson in compounding, and these values instilled by his father all came together to create something truly remarkable.
They did.
It really underscores the point that investment success isn't just about numbers and strategies.
Right.
It's also about character, vision, and understanding the forces that shape the world around us.
Exactly. And that's what we'll continue to explore as we delve deeper into the mind of Warren Buffett and the secrets of his success.
So to really grasp Buffett's investment philosophy, we need to talk about his mentors, the individuals who had a profound impact on his thinking.
Absolutely, the people who shaped his approach to investing. And we can't talk about mentors without mentioning Benjamin Graham, the father of value investing.
Of course.
His book, The Intelligent Investor, is practically a Bible for value investors. And it was a foundational text for Buffett. It really introduced him to this concept of buying undervalued companies.
Okay, so finding those dollars for 50 cents, as they say.
Exactly.
But how do you even begin to figure out if a company is truly undervalued? I mean, there's so many companies out there.
Right. It's more than just looking at a low stock price. Graham's approach was about deep analysis. You really have to delve into the company's financials, scrutinize its management team, assess its competitive advantages, and then project its long-term potential.
So it's like being a financial detective almost.
Exactly. Searching for clues that the market might be missing.
So you're not just looking for a bargain, you're looking for a fundamentally sound business that's temporarily out of favor.
Exactly. And Graham really gave Buffett the framework to do just that. He provided the tools and the mindset to approach investing with a disciplined, rational perspective. But equally important, I think, was his emphasis on understanding market psychology. And this is where that famous analogy of Mr. Market comes into play.
Oh yes, Mr. Market. I've heard that term thrown around a lot. Explain it to me like I'm 5.
Okay, so imagine Mr. Market as this kind of whimsical character who shows up at your door every day offering to buy or sell stocks from you. The catch is that Mr. Market is often driven by emotions, right? Fear and greed, and that leads to these irrational price swings.
He doesn't sound like the most stable business partner.
No, not at all. And Graham's point was that you shouldn't get swept up in Mr. Market's mood swings.
Okay.
The key takeaway is to detach yourself emotionally, think independently, and base your decisions on sound analysis, not on the market's fleeting sentiments.
It's about having the discipline to buy when others are fearful and sell when others are greedy.
Exactly. That's the essence of Graham's wisdom.
Okay.
But, as Buffett gained experience, he started to kind of evolve beyond this purely quantitative approach. He recognized that while finding undervalued companies was crucial, there was more to consider. And this is where the influence of Philip Fisher comes in.
Okay, so Philip Fisher, the author of Common Stocks and Uncommon Profits, another investing classic. What was his take?
Fisher's approach was quite distinct from Graham's. He focused on the quality of the business itself, emphasized investing in high-quality growth companies, even if their stock prices weren't necessarily a steal. He believed in finding companies with strong management teams, innovative products or services, and a consistent track record of growth.
So it's not just about snagging a bargain. It's about identifying companies that have the potential to create significant value over the long term.
Precisely. It's about investing in businesses with a moat, those unique qualities that protect them from competition and allow them to really thrive. And this marked a kind of a shift in Buffett's thinking. blending Graham's value-oriented approach with Fisher's emphasis on growth and quality.
So it's more of a holistic approach,
Yep.
looking beyond just the numbers to really understand the underlying dynamics of the business.
Exactly. And this evolution in his thinking was further accelerated by his partnership with Charlie Munger.
Ah, Charlie Munger, the other half of that legendary duo. I mean, his influence on Buffett is undeniable.
Absolutely. Munger brought this fascinating perspective to the table. He advocated for a multidisciplinary approach to investing, drawing insights not just from finance, but from fields like history, psychology, even science. He believed that to be a successful investor, you needed to be a well-rounded thinker.
That makes a lot of sense because, after all, businesses operate within the larger context of society and culture and human behavior.
Exactly. And one of the best examples, I think, of Munger's influence is the acquisition of See's Candies.
Oh, yeah.
It was a seemingly expensive purchase at the time, but Munger saw the long-term potential.
Yeah.
It was a lesson in recognizing the power of strong brands and durable competitive advantages.
So it wasn't just about the numbers. It was about understanding those intangible qualities that make a business truly great.
Exactly. And Munger had a term for this phenomenon, the Lollapalooza effect. It's this idea that multiple factors can combine to create really extraordinary outcomes.
Lollapalooza effect. Okay.
Yeah, so think of it like a chain reaction, where one positive element reinforces another and leads to these exponential results.
So it's about recognizing how different forces kind of converge to create something much greater than the sum of its parts. That's really interesting.
Yeah, it is. And these insights from Graham, Fisher, and Munger really form the bedrock of Warren Buffett's enduring legacy.
They provided him with the building blocks, the tools, and the mindset that enabled him to construct his investment empire.
But it was Buffett's genius to synthesize those lessons, adapt them to changing market conditions, and apply them with that unwavering discipline and a long-term perspective.
And that's what we'll continue to explore as we delve deeper into those key principles of the Warren Buffett way.
Okay, so we've uncovered these core principles: value investing, a focus on quality, that long-term perspective, and of course, the rational temperament. But how did Buffett actually use these to build Berkshire Hathaway? How did those come together?
Well, it's important to remember that Berkshire Hathaway didn't start as this massive conglomerate we know today.
It was, believe it or not, a struggling textile company when Buffett took control.
Ah,
He saw the potential not so much in the textile business itself, but in using Berkshire as a platform to really implement his investment philosophy on a grander scale.
so it's kind of like this, like a blank canvas in a way.
Yeah.
A vehicle to acquire and nurture businesses that aligned with his vision.
Yeah, precisely. He started acquiring companies that met his criteria: undervalued, strong fundamentals, durable competitive advantage, and of course, a management team he trusted.
Yeah.
He wasn't interested in quick flips or chasing trendy industries. He was building, a collection of these enduring businesses, the kind that could generate consistent returns over the long haul.
And this is where that magic of compounding really comes in, that Zinsezens concept we talked about.
Absolutely. Buffett was brilliant at using the cash flow generated by Berkshire's existing businesses to acquire new ones. And those new businesses, in turn, generated more earnings, which he could then reinvest to expand the portfolio even further. So it became this self-reinforcing cycle, a snowball effect compounding returns over decades.
It's incredible how he applied that principle on such a massive scale. But beyond the financial strategy, it's also remarkable how he built a company culture at Berkshire that really reflected his values.
Yeah, it's a key point. Berkshire Hathaway is known for its decentralized structure, its emphasis on integrity, transparency, and that long-term focus. Buffett gives his managers a lot of autonomy, trusting them to run their businesses effectively. He's not a micromanager. He's created this culture of trust and shared values.
It's like he built a family of businesses, each with its unique strengths, but all united by this common set of principles.
It's powerful. It's about more than just making money, right? It's about building something sustainable, something built to last.
A legacy that extends far beyond just finance. And speaking of legacy, we can't overlook Buffett's passion for teaching. He seems to genuinely enjoy sharing his knowledge and insights with others. What do you think drives that?
I think it comes from a deep appreciation for his own mentors.
Hmm.
You know, Benjamin Graham and Charlie Munger, both of whom were passionate educators. He's often talked about the impact they had on him. And I think there's an element of wanting to pay it forward, to share that wisdom with the next generation of investors and, business leaders too.
And he does it in such an engaging way through his shareholder letters, which are always filled with wit and wisdom, and through countless interviews, and of course those legendary shareholder meetings, which have become like global events.
Yeah.
What is it about those meetings that draws people in from all over the world?
I think it's a few things. There's the obvious draw of hearing from one of the greatest investors of all time, right?
Right.
But beyond that, there's a sense of community. It's a shared learning experience, a chance to connect with other investors who are passionate about the same principles.
It's not just the information, it's the atmosphere.
Yeah.
It's the excitement of being part of something bigger than yourself.
Yeah, exactly. And it's a testament to the enduring power of education, mentorship, and Buffett's, his unique ability to connect with people on a personal level.
And of course, we can't forget his incredible philanthropy. That pledge to donate the vast majority of his wealth. It speaks volumes about his character.
It really does. It shows that he believes that those who have been fortunate enough to accumulate wealth have a responsibility to give back. And it's not just the amount, it's the thoughtfulness behind it. He's choosing organizations that align with his values, focusing on issues like global health, poverty, and education.
His success isn't just about building a fortune. It's about using that fortune to make a real difference in the world.
And that's an inspiring lesson for everyone, I think. It reminds us that success isn't just measured in financial wealth, but also by the positive impact we make on others.
So, wrapping up our deep dive into Warren Buffett's world, we've covered his upbringing, his influences, his investment principles, the legacy he's built in the business world, and through his philanthropy. I think it's safe to say we've all learned a lot.
I agree. And while we've gotten some great insights, it's important to remember that learning never really ends. There's always more to uncover, more to explore. I love that quote from Buffett himself: the more you learn, the more you realize how much you don't know.
A good reminder to stay humble, stay curious, and never stop learning.
Exactly.
Well, thanks for joining us for this look into Warren Buffett. We hope you found it inspiring. Until next time, happy investing.